Hello, and welcome to Pro Trader Strategies Market Commentary for April the 1st, 2016. Happy New Year to the April Fools. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a lot of economic data come out today over across the pond overnight while we were all probably sleeping. We had a lot of PMI numbers, which is Purchasing Managers Index. What it is it's a bit of a survey where they call up these manufacturers, ask them their forward-looking guidance on purchasing of raw goods to implement into the manufacturing process to produce goods. So anything above 50 is expansion in the economy. Anything below 50 is recessionary for that economy. Everybody across the pond, aside from the French, had expansion above 50. The French below. Even in the UK, we saw manufacturing PMI in Great Britain come in at 51 versus 51.4, slightly lower than what they were expecting, but still showing expansion in the economy. So the overall market was starting to slump there. But here we saw a big market downdraft, and that was from the non-farm payrolls number. Non-farm payrolls is the big economic indicator for employment. What happened there was the employment change was 215,000 versus 206,000. So there was more employment happening, but at the same time, we saw the unemployment rate uptick to 5% from 4.9. Now, why does that happen? We have more people being employed, but the unemployment number, the unemployment rate of people being unemployed upticked. Well, we've talked about this many times. There's a lot of people that have fallen off of the employment line list because they're called discouraged workers. What happens is they've been unemployed, they've sought unemployment, they're looking for a job, they get discouraged, they stop looking for a job, so now they're no longer unemployed. So they're a discouraged worker. They don't show up in that number. So if those people start coming back into the job force looking for a job, that can push that number a little bit higher. So I've talked about this many times. This percentages and statistics can always lie depending on where you input your numbers. Well, these discouraged workers aren't an input, so therefore you can be not employed, but you aren't unemployed. So that may be what we're seeing there. Then we got our Institute for Supply Management, ISM, PMI, which is the Institute for Supply Management, comes out with the Purchasing Managers Index. They do the same thing. They call up these manufacturers, find out what they're looking to purchase going forward, and that came in at 51.5. Higher than expected. That came in at 51.8, higher than expected of 50.8. Previous data for the last several months has been below 50, so it was signaling recessionary. Now we just upticked above that 50, which is good for the overall economy. That caused this rally to push higher. Now we may be seeing a little bit of that euphoria wear off, in that the overall market might be signaling, well, hey, we're starting to see good economic data. Is the FOMC, the Fed governors, going to continue with this rate hike, which would indicate, good news on economic data front is bad news for the equities. So we'll have to see how that starts to play out. We also had the construction spending number come out here in the U.S. came in at negative 0.5%, was expected to be a positive 0.2%. So that was one that kind of got overlooked in the overall manufacturing data for the U.S. So we'll have to see if that really plays out. That one's not really as widely looked at as the ISM number for purchasing managers. Purchasing managers more forward looking. The construction spending is more what has already happened. It doesn't mean that they aren't foreseeing a ramp up. So that's why the ISM PMI numbers are more widely looked at, because that's, like I said, forward looking. And the non-farm payrolls is right now. So this is the 15-minute chart of the Nasdaq. Oh, one other thing is the ISM came out with the manufacturing prices paid came in at 51.5, was expected 44.5. So a big leap there. What was that due to? Well, the most likely the reason was because we saw these numbers in the crude oil /CL really below 40 and in the 30s for the most part when that data is being generated. Then or in the past when that data was being generated, right, the last few numbers, then we got this real big pop above 40. That's going to increase the manufacturing prices paid because of those inputs that they have to put into their manufacturing sector. So that's probably the caveat of pushing that number much higher. Then one other thing that I wanted you to look at was with the Nasdaq. We've been talking about this being the point of control, finding a bit of a comfort zone here. Well, this number, this line in the sand, where the most time and volume has been spent, has popped up here to 45.06 in the Nasdaq /NQ. So that could signal that the bulls are getting a bit of the upper hand there. Onto the E-mini S&Ps, as you can see here, just treading above water, just got their noses right above the line there, and up one on the day. That's /ES. On the breakdown of the E-mini S&Ps /ES, as you can see, again, this is where the unemployment number came out, then the ISM number rallied up. Could be profit taking, could be a little bit of that euphoria wearing off, but for the most part, we are coming off of our highs for the day right now. On to the trade that I've done, Mosaic, which is ticker symbol MOS. I put on this the Iron Butterfly for the Iron Butterfly webinar. So we did a 3-part series, Iron Condor, Iron Butterfly, and then how to defend those. This was one from the Iron Butterfly segment, and I had on the April 19, 26, 33 Iron Butterfly. And what that is I am long the 19 puts, and then short the 26 puts, then short the 26 calls, and then long the 33 calls. That's a defined risk strategy. So essentially, we're short the straddle on the 26 straddle, and then defined our risk with the 19 puts and the 33 calls. I go into all the details on how to build out that strategy, where to place those defined risk wings of the Iron Butterfly in that webinar. You can go to protraderstrategies.com and sign up for that. But originally, I sold that for $3.32 and then bought it back this morning for $1.74. Now, in that webinar, I talk about I like to try and take about 25% of max profit on that. This one, because it rallied up, we did this on the 29th of February. Yes, we did have a leap day. It's not an April Fool's joke, but yes, we did have a 29th of February this year, and that was on a Friday. It was actually on a Monday, because I did the webinar on Friday, put this on Monday after talking about it. Market rallied up and tested me on my break even, everything else, but the overall market has slid and came right back down there to right around that 26 strike. And it got a couple of weeks to go in that. I could hold on to that, try and play it out for a little bit more, but to me, it's not worth it. You take your profit and you run. Came back right down to my short strikes of the 26 calls and the 26 puts. Decided to cover that following along with my rules there. So that's the only thing I've really done. Today we're going to be doing the webinar on short calls. There's still a few stocks out there that we can implement this in with high implied volatility. You can always implement a short call strategy even in a trending up market. So, and still make profit, especially against your overall portfolio. You can lower your basis on some of those stocks you own in your overall portfolio, or you can implement this as a strategy that generates some income. So go to protraderstrategies.com, sign up for that strategy. The more the merrier. I love your input. You guys ask me about stocks that you're looking at, and I can wrap it around the different rules that I follow for this particular strategy and see if it works out, right? So if you can't take that, take it easy.